All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So again, apologies getting the video out late here. I've been sick over the last weekend. I'm still not feeling fully 100%. Anyway, but I'm going to try and get this video out to you guys here. So again, last week, spiders had a little bit of a decline. So if we look at the, you can see the weekly here, first week in a long time that we actually made a lower low intra-week, not necessarily closing below the last week's low, but we did spike that low at least at one point during the week. And lots of volatility coming in on Thursday, obviously. So we had a big gap higher. And you can see here, if we look at the intraday, just a massive rollover. I haven't seen a roll that hard in a very long time, honestly. Every support level that was there on an intraday basis just got completely nuked. And it didn't stop until we got all the way down to 5150. So it was a 100-point decline really in a couple of hours for the spiders. There was a couple of catalysts. Nobody seems to really know exactly what the exact one was. I'm kind of more in the camp it was geopolitical. So we had a few headlines. Obviously, the jobs data was out on Friday, and that number came in hotter than expected. But I believe that a lot of it came from Israel. So there was headlines of the Israel counterstrike, and Blinken kind of criticized Israel a little bit. That did cause a little bit of uncertainty and instability. I think that is what kind of caused that sell. We did get a bounce on Friday, and today's Monday. Obviously, we're getting a little bit more of a green day here so far. But a lot of it is, I think that jobs number, based on the selling that took place Wednesday, the hot jobs data kind of got priced in a little bit to an extent. And that's kind of why you're seeing that bounce, is that there was a lot of hedges already in place for that hot jobs data. Although, we say hot jobs data, but it was really, I think 90% of the jobs were part-time in government. So again, take that for what it's worth. But I will say that we have done some technical damage here on the chart, really for the first time. And you can see that we definitely had, if we look over at the spiders, we definitely had an uptick in volume on that Thursday sell, and we did slice that 20 MA and close below it decisively for the first time since really right here, or we could even argue at the beginning of the year we had that one-off day. But bottom line is, I think right now there's definitely possibly a near-term or interim top in place, and as long as this red candle here does not get closed above, I think that could still be the case here. We could, potentially build a sideways inside base here, inside of this red, and then we could see another push down, possibly as we get into the month of, or later into April and the month of May. But markets are getting a little bit of a bounce here. But again, I'm just going to go off of that right now. If that red candle high is holding on a closing basis, I think that there's a good chance we could see a little bit more distribution here in this market. There's a lot of daily chart support right now at 5100 and then 5050. So there's two good levels here below, right around that 50 MA, as well as kind of in that area. So there's a lot of daily chart support in here. If this level breaks, though, there's a little bit more potential for downside. If we flip over to a weekly, you're going to see, if I could just take these lines off, there's really not a lot of weekly chart support here until you get back to the previous all-time high. So right around that 4800 area, there's your pivot high, low, and then we broke out. So outside of that little 20 moving average there on the weekly, you didn't really build any support here on the weekly chart. So if we were to break these daily chart levels, I think there could be a little bit more, possibly the possibility of a little bit of acceleration to the downside. So that's kind of where I'm at right now. But markets right now are still holding up, at least for now. We do have CPI this Wednesday, followed by PPI on Thursday. And then I think Friday we also have, we've got we've got Michigan consumer sentiment. I believe there was one other thing though. or perhaps it was the so I'm sorry, the auctions. We have a few bond auctions, and they're going to be duration too. So 10 years on Wednesday, and then I think 30 years on Thursday. Yep. So that's what it was. And then we also have lots of Fed speakers out this week again. They should have their own TV show at this point. But so expect a little bit of volatility. I would think the first maybe day or two of the week might be quiet. You can see here on the intraday here, not a lot going on, just a chop fest. Tomorrow may be somewhat similar. I wouldn't rule out a little spike or two of volatility, but again, I think the market's going to kind of wait on that CPI number. So again, bottom line here, as long as we're above, or as long as we're below that red bar high here, I think the bears do have a chance to do something. We do have kind of OPEX coming up next week, so sometimes you get a lot of pinning effects, and you can get kind of a sideways market. But right now, we'll just leave it at that, and kind of waiting to see what happens on Wednesday here. But anyways, let's get over here to the Qs. So NASDAQ, same kind of deal. Short term, the NASDAQ does look a little bit different than the spiders. Again, I think this is your big line in the sand here, but notice how we've gone sideways. We did this technical damage here. Remember this trend line? We broke that like basically a month ago. And if we look at the SPX, it's just breaking that kind of upsloping trend line from October. So again, NASDAQ, a little bit a different look here. This is my area though, right around 433 and change. 432.74 was the low, actually, to be exact, from the 15th of March. A break below there could open up the door for 425, and then maybe even all the way down to 410. And again, that's going to be that previous all-time high area. That's where we chopped around at the beginning of the year, right there on the weekly. So that would be a logical macro target here if the market does go into corrective mode here. And again, there's your red bar high. So above that could open the door for new highs. You have your all-time high up at 449.34 as well, just above that. So again, same kind of look there. But Qs definitely have been sideways for a while, so they have not been making new highs with the market. And again, that's just something that I've noted here very much recently. IWM here, again, this is still holding up. Again, we did back off last Thursday with everything else. You had a kind of an engulfing candle here too, but the weekly is still all right. I'm very interested to see how the IWM trades here. If the market does go into backing and filling mode, and it does go into a corrective phase, does the IWM continue to see money flow? We've talked about that for a while. I think that if the market's going to continue higher, I think semiconductors kind of back off here, and then you see other sectors start to pick up. Again, pending if we do have a correction, once that correction is over with, I think that's kind of how that would work out. But right now, IWM holding up. 205 is your near-term point of control. There's a little support at 200 still, especially with this upsloping trend line, and then 210 is your near-term resistance. The diamond here, pretty good outside move. This actually did a lot more technical damage. It's actually closed below the 50 moving average, unlike the other majors. Again, getting a bounce with everything else. But right now, pretty good outside move there for the Dow. If this sets up a sideways base, it could be setting up a bear flag, maybe for a move down to the 380 handle. So that would be your possible scenario there for the diamond. If you can close above the red, then it can negate that. Semiconductors, again, similar kind of look here with that trend line break. So we did do a little technical damage. Again, right now, that red bar high remains resistance until proven otherwise. It's about a little bit of damage here done to some of these technology sectors. Speaking of IGV, we get our trend lines here. So we broke this, and then we back tested it on Thursday. We hit both of these trend lines here. We can actually look at intraday. Look at where it went, right up there, and then backed off, and it has not taken that out yet. So again, there's your resistance there for IGV. But yeah, again, if these starts to set up a sideways base, they could be pushing or setting up for one more move down here. So again, a lot of things looking top heavy. Dow Transports had a reversal on Thursday, but no follow through. This actually looks okay. And again, I still like it on the weekly. So again, this is a sector here where if you got semiconductors and other sectors to back off, or technology sectors to back off, I think this is one that could pick up the slack. So Dow Transport's holding up nicely, and they seem to be hanging in there just fine. Interest rates were all over the map last week, but kind of neutral to higher here as we got into Friday and today. This is a 2-year. If this pushes up above this pivot here and goes towards 5, there is pretty much no way that the Fed's going to be able to hike in June. It's just your Fed funds effective rate is 5.33. If they cut 50 basis points, that would put them at or below the 2-year yield, which is not something that they do. So that's a big line in the sand I'm looking at. And if this starts to break higher, you'd watch those rate hike odds go down. Maybe that's the catalyst for this market finally backing off and having a correction. So there's something I'm watching very closely here. There's 5s, 10s, and 30s. Again, we have an auction another week. Janet Yellen was in China, I'm sure pandering and trying to sell bonds because she knows she has to issue duration Wednesday, Thursday. So we'll see. Maybe bonds pull. Maybe it's a little good auction. They can pull it back. But I still think we're going to see higher lows here in yields. XHB, that backed off as well. The trend is still up on this one. It still remains very strong. Just overbought on the bigger time frames. VNQ here tested that weekly green bar low, and it held. So again, we'll just leave it at that. I still like this on the weekly time frame. It's still pretty good. But that level held and got a bounce there, and that's the big level for me. On the weekly, the XLF also a good outside move on last Thursday, but it did, it is bouncing back. We closed above the highs on the weekly, and now we're backing off here again. Very overbought on the weekly time frame. Trend remains up. We do have bank earnings later this week. Perhaps that's a catalyst. Maybe we can get a kind of like a mini blow off or something in these financials, and then maybe they can finally have a correction. They've had a really good run, specifically JP Morgan. KRE, again, I still don't like what that's doing on the weekly, setting up a possible bear base. KBE actually weekly is still fine. This bull pattern is still pretty good. So that one's okay. Broker dealer still okay. It's overbought on the bigger time frames, but still holding up here. All right, into commodities. So oil, again, another up week here, getting just shy of 88. We are backing off today on Monday. I still think this can get up to 90, maybe 92, and then that's kind of like max move right now. I would be really surprised if it got much past that. At this point, there's a lot of resistance up here, but you do have that measured move right there from this little inverse head and shoulder pattern. That takes you right up into that 91 handle. So we'll see if that gets hit. It might need to base here for a little bit longer. I'm just kind of neutral to upside bias on crude right now. And I just don't see how I don't see how CPI is going to come in anything other than warmer than expected, or at least warmer than last month, given the fact that oil is running. And by the way, we don't talk about gasoline a lot, but gasoline has had a nice run as well, and that is back to near the highs of last year. So definitely seeing some energy price inflation there. XLE continues to chug higher. It's overbought on the daily, but look at the monthly. You're just breaking out of a base that you've been putting in for 2 years. So this is still strong. It's gone higher than I thought it was going to on this leg. But again, that's what happens when you have those big impulsive bases or big impulsive moves after a long base. XOP holding up as well. This is coming to some resistance. Right here, you got pivot high, and then that previous high from 2022 is not that far off. And the OIH, that is close to my original target around 355. Basically got up there. It got pretty close this morning, 353.25. Again, overbought into some resistance. Monthly chart, I think this is going a lot higher. Doesn't mean it'll happen in a straight line, but yeah, these energy plays are still acting really well. Nat Gas had a choppy week last week. This could actually put in a little bit of a bull pattern here, and I still like the front contract. I like how we sliced the low here. We closed above it, and now we're just possibly putting in a bull flag. So this could actually get a bid towards 2, and then maybe up to 210, 220. I wouldn't rule that out. Again, seasonally, this is kind of when Nat Gas likes to bottom. February, March, April, right around that time. as demand for the summer cooling starts to pick up and in advance, essentially. But not a terrible pattern here for NatGas. I think maybe we could get a little bit more of a bounce and a retrace here. Dollar index, so all over the map again, hit the 105 level. We talked about that being resistance. We pulled back off of it. Now it has a potential for another higher low. So we'll see what it does Wednesday with CPI. I'm sure it'll get moved around. But yeah, if this breaks through 105, I think then the dollar could really start to take off here. You have some resistance at 106, but with those higher lows here, this can start to rally back up. So dollar index, little neutral here on the daily, but on the weekly, it's got potential to make a good move. Gold continues to make new highs here. Made a new high today. Pretty volatile session overall. Take a look at the overnight. Little sell and then boom, big outside move, and now it's holding up still. The miners are still acting well. They did have a mini kind of gap and crap day on GDX and GDXJ, but they're still, they're still having a big run here. A lot of resistance up here though for GDXJ around 43, 43.50. Doesn't mean it won't go higher after that, but it's just had a good run up here. You're kind of going the same thing with GDX, kind of going up into this breakdown area. So that's probably why you're backing off, but I still think dips can be bought in these. Silver, talk about volatility. Look at this sell overnight and then big move. It'll sell here. So they're going to see a lot of volatility. Silver gets, when it has bull runs, it will have big moves, big swings intraday. And this is no exception. We even had a big swing on Friday too, before closing back green. 28 will be a little bit of short-term resistance here. Sorry, let me get this. There we go. Short-term resistance right here. This is where we couldn't get through before. Remember in 2020 and 2021, this is the area we just had so much trouble with, and that's where it broke down. So might have to stall out here a little bit, but again, silver still having a good run. Platinum, nice outside move today on Monday. That should get to 1,000 or so in the near term. And then palladium's trying to peak up here. Again, still got to get through that 11 handle. When it does that, I think it could really take off. But those alternate PMs are still acting well, as is copper. Again, look at the volatility here in the metals. Sell, big V shape, and then right back up here. Again, into a big weekly level. But again, you have higher lows. So copper still holding up nicely. Lastly, Bitcoin kind of had like this wedge pattern here, and we're trying to break out of it right now. So we'll see if that can follow through tomorrow. But again, still looks good. I've been just maintaining kind of a neutral to upside bias on crypto. You can see the weekly here. Put a little bit of a base. I would prefer it to base a little bit more. Like I would like to see that weekly 20 MA catch up to price a little bit more, but it's still strong and it's holding up fine. So no problems there for Bitcoin. Again, so lastly, again, we have CPI this week. That'll be on Wednesday. That's going to be the big mover, and that'll kind of determine direction, I think, here. As long as we're below this red bar on a closing basis, and I think this market, the bears have a chance to make a move. They could just, we could just go sideways for another week until OPEX have a lot of chop, something like that. Right now here, there's a lot of daily chart support in this area. But if that goes, there's really not a lot till about 4,800. So that would be a big target there. Again, I'm not saying that's going to happen this week, but that's just something that I think we can entertain now that we have seen at least a little bit of technical damage to this rally that has been going on for quite a while. And again, it's going to have a correction at some point. We know that, and nothing goes up in a straight line forever. So again, it's important to make note of those levels and, be ready for them if and when they happen. So anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on ConoverTrades.com. We'll see you guys all next week.